Okay, everybody, here we go. It is Thursday, January 6th, 2022. Where to start? How about this? Let's talk about news on the economic front. So we found out this morning that another 207,000 people, 207,000 applied for first-time unemployment benefits last week, and continuing claims are 1,754,000. Both of these numbers were higher than the rocket scientist, freaking imbecile economist who were polled projected. Look, they're consistently wrong, these people. I don't know where they get these freaks from. But okay, look, it's all part of the lie, part of the scam that we're in some type of an economic recovery. As a matter of fact, it goes beyond that. If you were watching Bloomberg this morning, they had some freak from some investment bank, or wherever the hell he was from, talking about how strong our economy is. But again, what are they not telling you? What's the missing link here? So we can tie all of this together. People, it's one thing and one thing only: the velocity of money, the rate at which cash is moving through the economy. Before I freak out, does it make sense to you that if you have a recovering economy or a booming economy, you would expect to see cash moving through the economy at a rapid pace? Again, you will know this if you follow this blog. We are today at historic lows. You're not supposed to know this stuff. Again, this is all hidden in plain sight. You can look this up for yourself. As a matter of fact, it's on the Federal Reserve's own website. You have to understand, the Federal Reserve, their website, there's all this information there that you're not supposed to know is available to you. For example, like seeing the Federal Reserve's balance sheet, which is now like $9 trillion. Again, like I said yesterday, higher than the GDP of most countries on earth. Do you think that's by accident that a central bank has issued so much debt? And that's, again, that's the balance sheet that you're allowed to see. The Fed has two balance sheets: the one you're allowed to see and the other one that no one's allowed to see. It doesn't matter who you are. And that's the truth here. So on the back of that, people, let's look at the market here. So what happened yesterday? The market took a hit yesterday off of, well, two things: this new variant, IHU, and all the talk about what the Fed might do moving forward. Oh yeah, the Fed is actually, they're ready now. They're ready, finally. Remember, I covered this yesterday, to actually do something about inflation after missing their 2% target. We are at 7 with regard to inflation rate. That's their numbers. Okay, we know the real ones are much higher. But now, because they missed their mark by hundreds of percent, that's by accident too, people. You know that. Now they're actually ready to do something about it. So what was the story yesterday? Oh yeah, the Fed is finally ready to aggressively raise rates moving forward faster. Oh, and they're gonna wind down their balance sheet. Both of these are complete and absolute falsehoods. Okay, it's all dog shit. You know that. It's so out of control, honestly, people. Anyway, there's no possible chance in hell or anywhere else that the Federal Reserve is going to do what they said yesterday. And I expect, again, that this market will rebound. With that said, people, we are still close to record highs in this market. We don't get normal pullbacks anymore. Yes, the NASDAQ fell like 3% yesterday. Okay, why? Why did that happen? I explained this to you. Since last week, this guy has told you the market is pricing in a Fed rate hike. At least one coming up relatively soon, and it's going to be meaningless. The market will go higher on the announcement of the rate hike because, again, it's being priced in. That's how the markets work. They're forward-looking. You all know that. I guess if you follow this blog, at least you should know that. Okay. So with that said, with yields, rising right now, the 10-year yield more specifically, that puts pressure on tech. The tech sector is yield sensitive, rate sensitive. You understand? But again, I really believe this, and I sent out a little tidbit of information in my free newsletter, link in the description of this video, to those of you who do subscribe to it. We're going to have an insane opportunity moving forward to get in here in tech stocks, the tech sector, whether you want to get in on an ETF, but not yet. Not yet. Let's sit back. Let's watch the shit show and see how this plays out, period, the end. Look, what this market really needs, and again, why did I say yesterday it was a beautiful thing that this market actually did fall under some pressure yesterday? Because my lions, and you, at least I hope because you have a functioning brain, realize that this market needs to drop. The market needs to give some back, and what will that do? That will present more opportunities to buy cheaper. People, again, public enemy number one, the Federal Reserve is not going to stop. Whatever they say, expect them to do the polar opposite. Again, they're the enemy, and we need a revolution. We have to get rid of this institution, end the Fed. You see that over there? Thank you, George Gammon. Yeah, this institution must go. And unfortunately, they're too strong, they're too powerful. They've become the actual government now because they control the money. If they control the money or the cash, they control the freaking world. And I think you all know that. It's just so freaking twisted. All right, people, look, let's move on. You know what? Let me cover this real quick. The MMRI, link in the description of this video, something I know you are following every single day, is now over 103. So we are now in moderate risk territory. Now, look, even in low risk territory, let's say hypothetically the MMRI was 50. Does that mean there's no risk? Notice how it says low risk. Doesn't mean no risk. We always have to remain diligent. We always have to pay attention to so many little facets that are going on at any given time. But again, if we realize that right now we are in moderate risk at 103, should we be expecting the market to take a big hit? Well, gauging by the fact that this thing is in la-la land, anything is possible. But also understanding that the easy money, regardless of what the freaking criminal institution or the Fed says, they're going to keep pumping easy money into this market. That's their goal, to inflate some more. The system is debt-based. You all know that. It must inflate to function. The system must inflate. Cash must be borrowed from the future in greater and greater amounts just to sustain where we are. It can't even remain static. If the amount of debt being borrowed into existence were to remain static, this whole thing collapses, whatever's left of it. Again, the illusion of whatever they're trying to fist feed you because the market is, again, near all-time record highs is just that. We have an economy that is collapsing. Period, the end. You all know that. The data is fake. It's all shit, and I think you are well aware of that. But if they keep the stock market propped up, it gives the illusion. Again, what are we really seeing here, people? A new demographic, a creation of a two-tier society, a new feudal system, and our feudal overlords are making sure they keep the pressure on the middle class. Look, the people who are well off and rich, they really don't care too much about what's going on, and they know how to capitalize on everything around them. This is really the truth. But it's so simple. Again, understanding the dynamics of this, we will continue to do what we have been doing for freaking years. Years, people. I don't know another way to put it. Betting against the debt, becoming your own central bank. Speaking of that, cryptocurrencies are under pressure right now. Started yesterday. Good. It's a volatile space, and if you can't handle the volatility in the crypto space, what has Greg Mannarino been telling you? Get out. Get out of it, okay? It's not for you. You can't handle it? Get away. You find something else to put your cash to work. You want to be in the dollar? Good luck. The relative strength of the dollar, as I have said, will remain high, but its absolute strength will continue to dissolve right before your eye. We will continue to see skyrocketing inflation as the Fed lies out of both sides of its mouth that it's now ready to do something about it after missing their 2% target by hundreds of percent. Like I told you, we are now at 7% according to their own numbers. It's out of control. Gold and silver right now, silver's getting blasted. It's down like 4.5% pre-market, despite the fact that the dollar is relatively flat. But imagine my shock here, people. Look, this is a game. It is a twisted game, and everybody knows what's going on here. The commodities exchange knows it. Every person who works on Wall Street or around Wall Street or is even involved in this Wall Street game realizes what's going on. This is deliberate. This is JP Morgan. They dump paper contracts onto the market. This is not real physical gold and silver changing hands here, people. This is the paper derivative. And of course, it affects everything. Take advantage of this, people. We are in a debt hyperbubble, which is going to get much larger. Watch the Fed's balance sheet. The Fed talking about unwinding their balance sheet yesterday. What a joke. No entity is going to buy the debt off the Fed that they're currently holding that is yielding nothing. Way negative, okay? It's too stupid, but they got to convince you that that's what's going to happen. Look, I know you get it, and I know you are way, way, way ahead of everything because you follow this blog, but doesn't this stuff freak you out from time to time? It freaks me out. I think you all know that. So anyway, people, look, in summary here, more bad economic news. Imagine my shock. Numbers that missed the mark. Imagine my shock. Not going to stop. It's just a twisted environment. And our job is very simple, just to stay on the right side of it. Okay, period, the end. Whatever dog shit they want to throw at us, we're going to sidestep it. That's all we're going to do. We're going to continue to maintain exactly what we have been doing for years. Why? Because it's been working. And until something changes, until a major dynamic changes, we will continue to do what we are doing. Period, the end. I don't know another way to put this. I really don't. All right, people, look, pretty much that's it. Keep your eyes on that MMRI. Like I said, it's now about 103. Link in the description of this video. You should be checking this once a day just so you have an idea of where risk is in this market. Yes, risk is rising in this market. But again, it just means that you and I need to just focus a little more on what's happening. Okay, that's what we're going to do. We're not in the market here to try to pick tops or pick bottoms. We're just in here trying to capitalize on, well, frankly, the shit show. And that's all this is. That's what we have been doing for years. Years. And we're not going to stop. All right, people, look, I'm out of here. Love all of you. Please share the video. Get it out there. And I will see you later.